Crypto's biggest week is upon us, and there is a lot to talk about. I'm going to try and make the show relatively quick because I have a lot of tabs there ahead and we need to get started. So first and foremost, what do we have going on this week? As I'm sure many of you know, we have the US economic data, which is going to be the consumer price inflation coming up tomorrow, so Tuesday. And also on top of that, it's supposed to be the ETH Merge, which is not listed yet. We have the producer price inflation on Wednesday, retail sales on Thursday, New York Fed manufacturing index is also on Thursday, Philly Fed manufacturing index also on Thursday, jobless claims on Thursday, and then very, very important is the consumer sentiment, which is coming up on Friday. So you can most definitely expect an extremely volatile week ahead. With that being said, let's move on. Looking at what Alf says over here, he says next week we'll have another CPI report. The more volatile items, example, used cars in the CPI basket are now declining and supply chains seem to be easing and gasoline prices retraced a bit. So yes, in theory, inflation has likely, in inverted commas there, peaked, of course. So, but for the Fed, it's all about the month-on-month core inflation now, and not all these other metrics. So I'm going to try and show you guys both the bullish and the bearish case. And then ultimately, what I like to do is, of course, focus on the trend, because at the end of the day, that is the source of all truth. The trend is your friend until the end of the trend. And we need to see, has that trend started to end and reverse into a new trend? So looking at what TED Talks Macro says over here, he says that two key data points are going to be due in the US this week. Of course, again, mentioning it's the PPI and the CPI, and both will impact how Bitcoin moves. He's definitely a bit more bullish. So he's saying each data point saw its first decline month on month at last month's reading, and it's expected that these both print lower again this week. And of course, if it is lower, then price data trending lower will mean bullish, showing that the raising of rates is, of course, working and inflation is coming down. And then that signifies a shift back on into risk on assets. So that's at least from TED Talk's point of view. Another bullish guy is Andrew Kang. He says here that high time frame bullish divergences have started to show themselves. 2 to 4 weeks of shorts are now underwater. There's a big support to resistance flips. You got months of negative sentiment, high volume bottom. I disagree on that part. You got bullish macro, which is oil, DXY reversals, equity showing strength. MicroStrategy, as I'm sure you may have heard over the course of the weekend, is now going to bid another $500 million. You got 1 billion plus ETH BTC unwind. You got the whole implosion, of course, of all these mega funds, 3AC, Celsius liquidated, maximum negative sentiment. And then CZ has non-stop bullish tweeting. So these are some of the things that, at least from the bullish case. But if you go, I'm going to retweet this because this is a long thread, but it's a brilliant, brilliant thread by Haas over here. So go onto my Twitter. The link is in the description below. When the show's finished, have a read through this. Essentially, what he's saying is that oversold to overbought can happen in just 3 days. The market can go a little higher, but he sees this rally as the last hurrah, and here is why. And he goes on to explain basically how we're going through this a massive super cycle. Let me go to the end over here. So he's showing here we are also approaching the end of a super cycle that has been going on since the Great Depression. It's a very, very interesting read. And if you look at that as a fractal, then of course it would signify that there must be a major pullback down to this level. And then you start a new super cycle. And this is how the markets do work. The markets tend to work in these massive cycles. But what I have found most effective is really simplifying things and choosing the asset class that you wish to trade and literally focusing on higher highs and higher lows. All the other stuff is interesting, and that's as far as it goes for me. I don't trade off of this information because you can always have a bullish case and a bearish case. So with that being said, let's move on and look at the actual chart. So this is, of course, our long-term regression chart, which we now know that we've spent pretty much 3.5 months outside of the low band, which is not good. With what this chart is essentially telling you is still that this main area here remains the next target on the 2-week time frame. Now, different time frame charts will give us different price targets. I'm just stating the obvious on this chart over here. What it's basically telling you is that once we had this massive bearish engulfing candle over here, unless we take out the top side of this candle with what would now have to be another bullish engulfing candle, then the target continues to remain that 10 to 12K area. That is higher time frame stuff that I'm talking about over here, because we breached that all important 19,535 level. That is on a 2-week time frame, by the way. So looking at a weekly chart though, sound like a robot. How do I sound like a robot, James? What must I do? Is it the mic, guys? Let us know in the comments if there's something wrong with the mic.
It sounds like a robot to me.
Okay, what does the comment say, guys? Just tell us in the comments if the sound's okay. What did they say, James?
Nothing. The comments aren't refreshing.
Okay, comments.
So it must be just
Okay, it's just James. James had a rough weekend, guys. He went to a big party. Anyways, okay, let's carry on over here. If the sound's good for you guys, I'm happy. Some notable things that have taken place on the weekly chart over here. The first and most notable that I've seen is look at this massive tick up over here on the Bollinger Bands, the lower side of the Bollinger Bands. If you'll remember last week, I was showing that the key yearly level was matching up with that lower Bollinger Band coming in at around 13,880. And now it's starting to go up quite aggressively, and it will be the same thing on the top side, where it will start to come down very, very quickly. And that would usually signify that you're going to go through some sort of major consolidation. And after that, there's expansion following the consolidation, right? So that's the one notable thing. The other notable thing is you can see this was a massive spring off of this $18,500 area. So price spring to the upside absolutely cleaned out that 255 MA. So what had previously reacted as some sort of a resistance got pushed straight through over there. And it's a strong weekly close. Like, that is a pretty bullish candle. If you're looking at this as a purely weekly chart and you're wanting to trade a weekly chart, then your next target is pretty much going to be this 200 MA, which if it happens this week is coming in at $23,299. So that's another bullish sign, at least for the crypto bulls, is as long as this candle doesn't come all the way back down. Once this candle starts to come below the $20,000 level, which is the open, I would say that that is probably going to have been an absolutely massive bull trap, and then it can turn very, very ugly. So mark out on your chart that 255 MA. This level must be defended. If price has to pull back all the way down this week, as long as it bounces off this area and then starts to push back towards the upside, bulls still do have some sort of a chance. But with that being said, you have to be cognizant that anything between this 200 MA and the 25,700, which is your yellow 21 exponential moving average. And then, of course, you also have the 200 EMA, the white one, which is coming in at 26,000. Those are all going to be major resistance areas. And it's going to be similar to, I remember when price was way back over here, we were more targeting the upside around that $28,000 to $30,000 level as the primary resistance. And now it's going to be the same thing. Like, now you just lower that resistance area to between $23,000 and $25,000. So with that being said, one other good sign is that very recently the weekly Heikin-Ashi candle has just flipped green as of this week. So if bulls can turn this one completely green, there might be a couple of weeks of upside, and who knows, maybe even a longer term macro reversal. But with that being said, also, what about the Fed pivot indicator? Because that's all the economic data that's coming out is going to revolve around this and whether the Fed is going to pivot. According to this indicator over here, it looks like the bulls still have major control. So bulls meaning that the Fed is likely not going to pivot. This chart is going to continue on towards the upside as it has already for quite some time. And I like to use this indicator over here. It's the ADX and DI. You can see that the green, which is signifying the upside momentum, is still tilted up. And then you have the white is the moving average over here is still also angled upwards. So I would expect continuation on that. So with that being said, now we've covered some of the bullish scenarios. What about the bearish scenarios from a macro perspective? So Mac 10, he says over here, I call this one mind the pivot, because it shows that the last 2 times that the Fed pivoted in a recession, the market collapsed. And yet what today's bulls want more than anything is a Fed pivot. And I must agree that anytime that we've brought this chart up, we have said that, look, what bulls would want is something like this, the Fed to pivot, that to come down. That would be a signal for completely risk on again. But when you do look at this chart over here by Mac10, he does have a point. Just because the Fed pivots actually doesn't mean that anything changes. You could still be in quite a bearish scenario, even with the pivot, in the same way that happened all the way back in the year 2000 and just before 2008, massive sell-off. You can see over here, the Fed pivoted, but look what happened to price, 80% down. So this is the thing. Trend. It's your ultimate source of truth. You cannot go wrong with the trend. Higher highs, higher lows. Literally tattoo that to your arm and make sure anytime you trade, you look at that. That is your ultimate source of truth when it comes to trading. So Alf shows you as well one way to grasp how tight the US labor market has become is to look at how long you're likely to stay unemployed. For almost 70% of the US labor force, dark blue and green, it takes only up to 14 weeks to find a new job. And that's on par with 2006 to 2007. And then he said, Fed pivot my ass. So essentially what he's saying over here is that, look, the labor market is still decent enough. It's not going through a major crisis, according to this data at least. And therefore, the Fed doesn't really have any reason to pivot. If anything, it's showing that if the market's still strong, they can continue to raise rates. There's no problem there until there's major signs of a weakness in within the labor force. Then the Fed won't even think about pivoting. That's at least according to Alf and this data over here. So the Irishman, one of our top researchers at Crypto Banter, he shows here CPI and BTC, all CPI releases of 2022 and its impact on the price action, which he's now conveyed on a chart. So he said you should be looking at the days after the event, as each time, without fail, it has resulted in large moves. Meaning, of course, volatility is incoming. The blue lines equals the day of the CPI release, and then the white boxes equal the exaggerated move. CPI is tomorrow, which is September the 13th. So looking at this over here, you can see again what he just mentioned. Blue is the CPI result, and then white box, 25% move. Minus 25% move. Then we got an up one, plus 25, minus 30. This one was flat over here, minus 41 in June, up 17 in July. And then we had a minus 23 in August. So the question is, what's going to happen next? Basically, what I want you to deduce from this information is that you kind of want to wait a little bit for final confirmation of which way to play the market if you're dealing with serious money. If you're somebody out there who has an extremely high net worth and you're looking to enter the market with massive amounts of money, I really encourage you, just be a little bit patient and stuff. If the CPI result comes in much better than expected, don't just ape in, because it could end up being a bull trap. You kind of want to wait for a couple of days of price action to unfold and then make your decision based off of that. Is the trend still up and down, up or down? And you can see, looking at this, look, this was a clear downtrend. Then we kind of flattened out a little bit, consolidated, came down more. We almost took out the previous lows on this side over here. And I did mention on a previous stream that likely there would be liquidity hunts for those who had placed their stops on the second and third higher lows on the daily chart. And that's exactly what happened. So then it gets sent back up, kind of take out the shorts, and then it could very well go back down. So interesting week ahead. Dexy, of course, this is one of the reasons that we have some sort of relief, is because of the dollar strengthening against the euro and other currencies. But at the end of the day, many are calling for a Dexy top, and I still kind of see it like this. This is a straight uptrend. Nothing has changed. We got our white LARP lines over here, and I would expect once it gets to this trend line somewhere within this region, it is most likely going to bounce. And to be honest with you, as long as this area gets defended, as long as this zone over here doesn't get taken out, I would continue to say that the dollar is bullish. So I'm going to actually gray that out, and we'll keep this on this chart. As long as price bounces out of this area, even if it breaks down the diagonal trend line, dollar is still bullish in my opinion over the next couple of months. So looking at the stock market over here, look, coming into a key area, it could be a retest of this pivotal zone, which was the orange horizontal line. I don't know whether we're going to push up into that 312 area, but if we did, I would expect that this is most likely going to be tested as resistance. So keep an eye on that. Looking at the volatility index over here for the S&P 500 is contracting back down. Don't have much to comment on this. I'll just wait to see how that unfolds, but I would expect volatility to kick in this week, so it probably goes back up. This was our pivotal area on the S&P 500 futures, which I was looking at as that white dash line. We did take that out. That would have meant that a lot of liquidity got grabbed there. And now the question is, do we flip this into support and then continue on higher, or do we turn straight around? So today will be interesting. Tomorrow will be even more interesting, because I think that's when the main price direction will be determined. Moving on over here. Another bearish scenario is Michael J. Kramer. He says, surprisingly, the rally this week in the S&P 500 has matched the 2008 analog. This week, as I just said, is the pivotal week. So if you have a look at that, it's still mimicking exact. So trend. That's your ultimate source of truth. I'll keep saying it. Then you have here Cycles Fan, the New York Stock Exchange up volume yesterday was 90%. It's the fourth 90% plus day of this year. And then what happened on the previous cases when you had that 90%? Well, he's showing that on the 8th of the 10th, I think, what has he got here is August. Yeah, that should be the 10th of August. The S&P 500 topped 4 days later. On the 19th of July, it topped 3 days later. And then on the 13th of May, it topped 2 days later. The only close example that topped on the same day was the 89% on the 4th of May. But that was an FOMC day. So essentially what he's saying, in a nutshell, to summarize that, anytime that the New York Stock Exchange had such high volume, it marked a top in the stock market a couple of days later. And when you look at this, I mean, this is a straight downtrend, guys. Yes, you have these big bear market rallies, but at the end of the day, this is still a downtrend, and you need to take out some of these high levels to re-establish a higher high. Yes, you have a couple of high lows, but you still need higher highs, and that has not been the case yet. So moving on. Okay, Bitcoin. This is our inverted chart. So this is the thing with trend lines, guys. Look, I mean, this can technically be adjusted. This was the previous trend line that I had because it was the best fit. I only had one touch point over here, another touch point over here. But now, quite literally, you could just go like that. You see, now it's got the 3 touch points once again. And that's why I say to you guys that focus on the higher highs and higher lows. And I drew this horizontal line in. I'll make it nice and big. Inverted chart, remember, so it's working the other way around. 24,464. I said that if this level gets taken out, you break that higher low and you now create another lower high. Or lower low, excuse me, you make another lower low, which will come into the support zone. So at the end of the day, this chart is still working. This was a higher high close, although marginally in relation to the one on the left-hand side, it is still a higher high. And that would mean that, of course, you would expect continuation towards the upside. Continuation means more downside. So with that being said, let's quickly give a shout out to PrimeXBT, which makes these videos possible. They are one of my sponsors, so they give us the ability, of course, to make this content completely for free for you guys. Check them out. The link is in the description below. If you do want to join, use my promo code. It's Kyledoops. It should all be in the link there. You can get a $7,000 sign-up bonus. So everything is in the description below. All right, looking at our 3-day chart, which was in that downward channel. This is the main picture over here. Now you have to ask yourself the question. Look, you had your 3 major drives, right? I mean, 2 major drives. 1, price pushed up. 2, and now you're kind of consolidating. So are we going to be led to the 3rd drive over here, or at best case scenario for the bulls, I think, is that price consolidates within this range, gets to that $24,000 level, maybe comes back down, sweeps the range lows over there, comes back up, finally breaks this downward channel over there, and then we just keep consolidating, and then we can slowly start to grind up leading into sometime next year or the year after. That's kind of high time frame overview of what I'm expecting. Shorter term time frame, I did mention to you guys that yes, this is a possibility that we could be forming at some sort of a double bottom over here. And so far, it is looking like it. As long as price can hold above the mid-range, which is at 21,700, then the next upside target becomes at 24,386, which I would definitely take profits into, because you are coming into the range high as well as the downward trend. So there is a double reason to at least take profits out of that zone. Okay, moving on to the guppy indicator, the super guppy indicator. I haven't shown this one for quite some time, but I noticed something interesting when looking at it yesterday. So what we identified previously is that the market typically works with that phase of contraction, and then it expands and then contracts and then expands, and then we went through contraction, and the expansion, of course, started to the downside. Now, what you will notice over here is if you look at this price action, every time after the contraction and we started to expand, guppy indicator on the daily flipped red, then you are left with a final bull trap. As you can see over here, this price action came almost out of the top side of the guppy to flip it back. See, it started to turn gray over here, and it looked like maybe this was a false breakdown, and then it just ended up being a final bull trap before major expansion. Same thing happened over here. Look at that. This one actually got all the way above and then continued to expand to the downside. Now, I was expecting that to happen somewhere around here, hence the arrows over here. And now look at this. Could it be that the same thing is happening again? I'll be paying close attention to this. This is why I'd rather wait for all this economic data to come out, wait for price to consolidate a bit and hold above this super guppy indicator that's turned red, let it flip gray again, and then wait for green before you start to go long. That is, again, talking to more those of you who are long-term investors or major swing traders. So Ethereum will actually look similar. I think it may have turned green already. Let's look at Ethereum. Okay, interesting. Ethereum over here. Look at this. See, things work in a very similar fashion. Contraction, expansion, contraction over here. Look at how high price gets over there. Expansion, contraction. Now price is pushed all the way up. But if I zoom in over here, this resistance area is still relevant. It has not cleared this. Let's grab that across there. So now I can pull that across. You're kind of retesting this underside support over here and the resistance. And I would rather wait for Ethereum to start to hold above this box, which means it needs to hold above $1,800 before I start to consider any sort of a bullish case. Otherwise, this could be a big bull trap. It could be one of those buy the rumor, sell the news events. So we'll have to see what happens tomorrow with the merge. Looking at Matthew Hyland's tweet over here, he's got Bitcoin's daily RSI, which is approaching the trend line resistance that began in October of 2021. So it will be interesting to see whether it can break through this. Looking at that chart live, this is what I have over here. You can see connecting 1, 2, 3. Let's see if this manages to get through there, or if it's going to act as some sort of a trend line and bounce off of that to the downside. So, using the EMA strategy, and I'm just going to touch on this very briefly, you can see that massive move that we had on the 9th of September. It has reclaimed the 12 and 24 EMA, which is, of course, a good sign. You'd want to see this hold and let the yellow cross back above the red. Ultimately, I would still wait for a break of this diagonal trend line, which is coming in around $23,000. So as mentioned, between that 22 and 25,000 is major resistance. So someone's asking, how can you add the guppy indicator? You can literally just type it in. It's CM super guppy indicator. So you need to type that in on your indicators. CM super guppy indicator. There it is, by Fritz and Murphy. So click that, put it on a daily chart. You can use it on other time frames, works very nicely. All right, moving on, guys. Low time frame for Bitcoin. We had the descending triangle. We've now ripped straight through that. Let's delete it. It's irrelevant. Delete that. It's irrelevant. Reclaim this area was important. I can just pull that over. Bitcoin for the bulls on the low time frame. You really want to hold above this box. If you start to break below this box, which the lower side is coming in at around 20,700. So you see something like this. So price comes around like this. Retest there. That would be my signal. Get out completely. This is going to be a mega bull trap. However, on the contrary, if it gets like this, retest, holds above, can keep going up like that, then start looking for higher lows and you start bidding every single higher low because the trend could very well be reversing. El Capo, who I would say calls it right, but his timing is often very off. He says that the entire market is approaching major resistances. In his opinion, we see a last leg up of 5 to 7% soon, and then there'll be low time frame distribution, and then we nuke. Get ready. So that's at least what he's looking at. I find that interesting. You also have over here Mr. Chief, and he's showing, is this a bearish retest or deviation? He is short. Let's quickly click on that again. Okay, and he's looking at this on the 4-hour chart. So it would be something like this. He's looking at this trend line, asking, is this a bearish retest? If that is the case, then this is probably already, your trap has already been set. That would most likely be the end of it. I myself am still targeting slightly higher, and I'll pull that chart out in a second's time. Let's see, it should be... Okay, one more thing that I want to mention on the tweet side, Bitfinex long-short ratio is very quietly at all-time highs, meaning that there is likely a bearish case over here if these longs are starting to get over-leveraged at the moment. I'm looking at this chart over here. This was my chart from the previous week. I'll show you the Ethereum one as well. I was looking for these stops to get wiped out, but I put a question mark because I actually wasn't sure whether it would get that high. Now we've had that spike. Again, that could very well be the trap. If not, then I'm starting to target 22,600. If we clear that level, I pretty much would target these highs at, let's put a line in a horizontal. I would then start to target these highs at 25,188. What I have to say about all of this is that these markets, when you have these relief rallies, they can actually go much further than one would expect. I want to remind you as well, there is that CME gap on the daily chart coming in at $28,000. These gaps have a very high probability of being filled. And if bulls were to take control and there were some massive sort of short squeeze, because remember, every time these stops get wiped, the guys that were short selling, this is why you get these massive aggressive moves to the upside. And here the stops have been wiped again. So the question is, are we going to have another aggressive push over here? Then shorts from up here will start to cover, and that could actually end up sending price all the way to $28,000. So I know I've given you so many different scenarios today. And all I want you to do is just be patient, wait for the economic data to come out, because that is essentially going to be the major catalyst of what comes next. So the question is from Kamikaze. He says that if the big players want to maximize their profits by wrecking as many people as possible, which is very common in the markets, especially in crypto, is these major liquidity hunts of getting guys stopped out of their positions. Do they, one, dump ETH hard before the merge to ruin the proof of work airdroppers planning to sell? Or two, do they pump ETH hard into the merge to force funds wary of tech risks to buy higher after? Which factor ends up weighing more? So looking at the picture of Ethereum over here, this is what I said. I tweeted this out, I think it was on Friday or Saturday morning. And we took a long position over here. I could see there was this resistance was getting flipped into support. And we had a perfect move all the way up over here. I was looking for higher, but I told everyone on Twitter and the Discord group I'm closing my positions because it looked like it was going to roll over, and it has. I'm not ruling out that this is still possible. I could just move this over like that. You might still get a spike above that 1,818, but that would be my ultimate short zone. If price gets back above over that area and you have some sort of a deviation like that, I would love to go short from that and target lower prices. And I have the dash line over here, which is the 13th of September. coming up tomorrow, marking the ETH merge. Now, I think what could happen, and this is just like there's no statistical data behind this. This is purely just my opinion and my feeling, but I feel like prices could start to really pump into the merge, and everybody would say, oh, the merge was successful, brilliant, amazing. And then obviously there'll be some sort of a come down from that a couple of days later. So patience is a virtue. Be patient in this game. Okay, last but not least, looking at Bitcoin over here on the 1 hour time frame. Look, if these levels hold, it's going to be the same as what I just showed you on that 4 hour chart. I then look to 22,700, hold above 22.7. Then you're looking at 24.2, clear that level. And then I think the final stops get wiped above 25,401. That's the final short sellers that would have entered within this zone. It's all a liquidity grab, guys. So price gets sent up, short squeeze, short squeeze, short squeeze, wiped out, and then price then typically tends to continue to the downside. So with that being said, the only trades that I have on at the moment is the Bitget trade, which I showed you previously. I said it's less than a week now, but I said we'll check in again in a week's time. And you have this grid over here. So what it would have done is it would have, because this is an automated strategy, I put low 2x isolated leverage using half of my margin in case there was some sort of a rally. So I might start to add more, expecting from my own TA if I think there's going to be a short squeeze all the way to 25. Then these grids over here entered me into 36 short positions automatically like that. So the red ones, this is the last short that needs, this is the 36th one that needs to be entered. And then you see it flips blue like that. That's now when or if price starts to come back down like that, it will automatically start closing those short positions. So it works on like a grid, and it kind of just fluctuates through the market, through the ebbs and flows. And yeah, find it interesting. At the moment, it's down 4%. So for full transparency, down 4%. But of course, I do still think we're going to get the pullback. And then that will be the true test of how well this works out. So if you are interested in that grid trading strategy, have a look over here. You can join Bitget. Use my sign up link over here because you can get up to $8,000 in sign up bonuses. And if you are a US citizen, which I think most of you are, maybe you're not watching yet because it's Europe, but for the US citizens, you don't need any sort of a VPN or anything to mask your location. It's perfectly legal for you. And guys, I think that brings us to the end of the stream. A lot of information. It's going to be a wild day and a wild week. Follow me on Twitter. Make sure that you have a look at the description below. Join the Discord. That is where I can give you live, up-to-date information without having to set up an entire live stream like this. So with that being said, guys, I will see you all on the next video. Thank you so much for watching. I appreciate each and every one of you. Please give this video a like, hit the bell notification, and subscribe. And I'll see you all on tomorrow's video. And for the rest of you, I'll see you on Discord. Cheers for now.